I'm going to share exactly how you can use these three methods part-time from anywhere in the world to potentially add a new income stream to replace any money you lost in the past, keep what you already have, and grow your bank account into a fat nest egg that you can use for anything you like. Now, I'm about to deep dive on the trades I showed you earlier, so stay with me. But first, I want to address a common concern I hear a lot from new traders and also from misinformed traders. That concern is, I heard Forex trading is risky. Well, Forex trading is indeed risky, especially when done improperly, just like speeding down a road at night in a Ferrari with your headlights turned off is risky. But of course, just like there's a right way and a wrong way to go fast in a sports car, there's a right way and a wrong way to trade Forex. And unfortunately, most people attempt to trade Forex by risking way too much on any one trade. That leads to over trading, or by blindly following robots, or forcing trades when there really is no opportunity at hand. The key is knowing how to manage risk first, and then you let the profits take care of themselves. And in these videos, I'm going to show you how to shield your account from risk so huge losses can never happen to you again. I'm also going to show you how to potentially create a steady, predictable income stream that puts the odds of success in your favor forever. Now, most people will never be able to compete with you when you trade like this. Let's start with some trades. I'm going to be illustrating that point further as we deep dive the charts that we looked at earlier in the video. Here's the Euro-US dollar 4-hour candlestick chart. I want to spend some time right now covering the natural movements in the markets that the profit multiplier methods take advantage of. First, in an uptrend, we get the market moving up. It trades off here, sells off into some level of support, and then heads on higher, and of course the goal is to get on board somewhere in this area. There's nothing new about this buying on the dips. The hard part is which dips do you buy, because oftentimes the market will start to recover only to turn back down again. And that's why it's important to have high probability setup conditions that identify the best of the best setups to put the odds in your favor. Another situation is where the market's been moving along and then it starts chopping sideways, and now it's going to break out eventually, up or down. And there's nothing new about that either. Trying to get on board if it breaks to the upside, or short position if it breaks to the downside. The hard part again is avoiding all these false breakouts that often occur in these kinds of patterns. Again, the profit multiplier method's setup conditions filter out most of these false breakouts and only go after the high probability situations to put the odds in your favor. The other situation that often occurs, not as often as these two, but nevertheless, the market's moving up, makes a higher high, and then heads back on down. Oftentimes, if the conditions are just right, when this occurs, you're going to get a counter trend move that you can trade opposite of what the prevailing trend was before that. And then likewise on the short side, if the market's heading down, we want to try and sell a short on a rally, take advantage of the down move, or a breakout on the downside, or a counter trend move to the upside where you get a lower low here than this previous low. So these profit multiplier methods are taking advantage of these situations, but being very, very picky about which setups to take advantage of and staying away from all others. So when you do that, you have the opportunity to enjoy a higher, much higher percentage of winning trades than would otherwise be the case. Now, how does that fit into risk management? Well, your very best approach to managing risk is to avoid trades that are likely to go against you or that are low probability trades. Never get in the trade in the first place. Never force a trade. That's your first line of defense. Now, once you do get into a higher probability trade setup, you still need to protect it with stops and good trade management practices. And we teach you exactly how to do that. And we're going to be talking about many of those practices as we go along in this video series. Okay, cleaning up the chart. Let's look at some of these trades. Market's trading up here and then stalls out, heading sideways. At this point, get a setup bar to go long. It did jump up for a small profit in accordance with the profit multiplier methods. And then that was it there. Then we had a short setup to go short here, expecting the market to head lower. Again, only an opportunity for a small profit, but nevertheless a profit. And then here we had a buy setup right here, looking like a breakout situation. In this case, the market really ran very nicely for very nice profits. Another buy here, another here, and in both cases ran very nicely for nice profits. We're going to deep dive the precise trade management rules on how you exit these trades profitably in the next video. But for now, I just want you to get, more of a feel for how this is going on. Now, you see this big move down here. You could say, well, why didn't you get short here? Because this was not a high probability setup. The goal here is not to jump on every single move. You can't do that. You can try to do that at your peril. What you want to do is be insistent that the market sets up in accordance with high probability opportunities, and only then do you trade. Here was a short setup. Again, just a quick profit down. Another one here. This was a loss right here. The market really didn't move down at all and was stopped out. And then you see a buy setup bar to get long. Very nice move up. Very nice profitable trade. Another buy to get long here. Another nice move up. So you can see when you're trading these markets, you're not wedded to one side or the other. As soon as that short trade failed right there, you can't be concerned about changing the direction and going where the market tells you it wants to go. Here's a British